Roll call, Robin, please.
All right. Alderman Bob Bauman.
Here.
Senator LaTanya Johnson. Mr. Jim Cantor.
Here.
Ms. Liz Sumner.
Here.
Ms. Jessie Rodriguez.
Here.
Mr. Bill Christensen.
Here.
You have a quorum.
Great. Before we start, I just want to make sure, Mike, you go ahead and kind of explain our setup. It's changed a little bit. For those not in the room, just want to make sure we know we have mics here in front of us. And the reason why.
Yeah, absolutely. So the microphones in front of you are just for the overflow. And so if you just go ahead and they're on, and we can mute them from out there as well. So when we go into closed session, you don't have to press anything. Everything else is the same.
Great. So we had some communication issues last time, and I think those have been solved as we've gone through. With that, I will go to our first order of business, which would be the approval or any discussion and approval of the meeting minutes from our last our last committee meeting on the 22nd of January.
I'll move approval.
Good. Second. Second. All in favor, say aye.
Aye.
Aye. Aye. Any opposed? Any opposed? Okay, great. Meeting minutes from the Thursday, January 22nd finance meeting are approved. Next, I'll kick it over to Kyle for our financial report and update.
All right. Thank you, Mr. Chairman, and good morning, everyone.
Good morning, Kyle. Good morning, Kyle.
The main topic of today's meeting is a presentation from Baker Tilly regarding the 2025 audited financial statements. We will also review our year-to-date 2026 financials along with an updated forecast for year-end. So given the full agenda, I will move directly into the 2026 financial numbers, and we'll start with page 5 of your packet, which is the event mix summary. As shown in column B, the current 2026 forecast is approximately 106% of budget and about 95% of 2025 annual activity. Good news here is that we are exceeding budget on both conferences and conventions, as well as corporate meetings when comparing columns A and B budget to forecast. Activity remains on budget in both the arena and theater, as seen on lines 14 and 21. And as a reminder, while this report is helpful in understanding event activity levels, it is not a perfect indicator of building utilization or net income. So we'll move to page 6, which is our year-to-date income statement with column IDs A, B, C, and D across the top. Column A reflects budget through March. Column B reflects actuals, and column C shows the variance. Starting with the bottom line on line 64, we are unfavorable to budget by about $715,000. There are several primary drivers contributing to this variance, which I'll walk through now. Starting with
1 second, I'm just LaTanya, I think you're on. Senator Johnson. Can you hear us? Is she on mute? Senator Johnson, can you hear us?
Yes, I can. I can hear you.
Okay, now we can hear you. Thank you. I just want to acknowledge, thanks for being on, that you have joined the conversation. Appreciate it.
Alrighty, starting with operating income lines 1 through 14, particularly line 4, food and beverage revenue is down from budget about $193,000, while gross F&B revenues are exceeding expectations. Operating costs, particularly labor, in the month of January and February have come in higher than anticipated. This trend is consistent with what we experienced in early 2025. Management continues to work closely with Levy and monitoring to control both food and labor costs while maintaining the service standards set for the organization. This will be an area of focus as we develop the 2027 budget. Now, despite this, total operating revenues are down less than 1% to budget as shown on line 14. On the operating expense side, lines 15 through 27, focusing on line 20, total event expense, which is the primary driver of this variance. The total event expense relates to payments to arena tenants, with approximately $1.2 million driven by contractual obligations for food and beverage share, merchandise, and catering credits associated with the Admirals. It's important to note that the food and beverage revenue share in this category is based on gross sales. So as a result, even though the profit share from Levy on line 4 may be trailing budget, there is no corresponding reduction to these payments. This contributes to the negative variance of approximately $354,000 as seen on line 27. Moving to line 33, tax revenues are approximately 1.2% below budget, driven entirely by city and county room tax. That's on lines 28 and 29. At this point in the year, management is not overly concerned with this variance. One of the challenges with budgeting and forecasting tax revenues is the inherent lag in the data. Like developing the budget relies on partial year actuals. As we look ahead to 2027 budget process, management will be evaluating our growth assumptions as we have in the past to ensure that we are aligned with the current trends. And moving to non-operating expenses on lines 40 through 63. Line 44, health and dental insurance is running higher than expected due to the timing of our FSA employer match contribution. Again, this is a timing difference and is expected to normalize over the course of the year. Lines 49 and 50, legal and professional services combined are $177,000 over budget. The increase is driven by elevated activity levels with Hush Blackwell and Kane Communications during the first quarter. Based on the current activity levels, we do not anticipate a significant increase in this variance beyond what we have experienced year to date. Historically, though, first quarter, it's not uncommon to see these variances of this nature. The combination of these factors results in a negative net income variance of approximately 28% to the budget as shown on line 64. All right, turning to the annual forecast on page 7, focusing on columns E through H. Column E reflects the full year budget. Column F reflects our current year-end forecast. Starting again with the bottom line, line 64, column G, the projected variance is approximately $817,000 unfavorable to budget. While the dollar variance is larger than what we see year to date, or what we just saw year to date, it represents a much smaller percentage, approximately 3% for the full year compared to 28% year to date. Total operating income on line 14 is slightly below budget by about $38,000. We expect food and beverage performance to improve as the year progresses, closing the current gap. Most other event-related revenue categories are trending ahead of budget with additional upside potential based on the current event mix. On the operating expense side, we are projected to come in slightly favorable to budget. This is primarily driven by utility costs on line 18 and total event expense on line 20. Total event expense is related to timing where budget included activity in May that will not occur as the Admirals and Wave seasons have now concluded. So moving to non-operating revenues, lines 28 through 39. Tax revenues on line 33 reflect current year-to-date shortfall with the remainder of the year forecasted in line with budget. And on line 37, the Bucks district ticket surcharge is below budget due to the absence of playoff games as the budget had assumed one playoff round. As for non-operating expense, line 48, Visit Milwaukee is higher than budget, driven by the 2025 performance payment exceeding prior estimates used during the budget process. Line 52, insurance expense is $150,000 over budget. This reflects higher than anticipated premium increases in a continuing hard insurance market, despite proactive work with Horton, the district's insurance broker, during the budget process. At that time, management was actively working with Horton on renewals and evaluating potential carrier changes on certain policies. As a result, the district did transition certain coverages from travelers to selective. Overall, the district is projecting a $817,000 shortfall on $28 million net income budget. At this time, management is not overly concerned with the full year outlook and continues to actively manage performance relative to budget. The current forecast exceeds 2025 actuals, and operating revenues have been projected with a degree of conservatism. The primary risks remain in tax revenues, which can be sensitive to broader economic conditions and spending related to legal and professional services. The balance of the calendar year remains strong. with opportunities for upside. As a result, we may see an improvement in net operating income as the year progresses. Any questions on the income statement?
So you foresee this to be kind of where we will end up? Do you foresee any, I mean, there's a lot of uncertainty out there. We know that right now. And the area, just the food and beverage revenue side, you said we expect that to pick up.
Yeah.
Why would that be, or what indicators do we have? Because that's one of the bigger items that we're missing on. And I know it's tough out there right now, believe me.
Yeah, for food and beverage, particularly in January and February, we saw some higher labor than we anticipated. Some of it was related to training that Levy was doing, and that has come to an end. And we've seen March came in better than budget, so that gives me some reassurance that we'll continue to pick up a little bit through the rest of the year. I also think there's some, given the leadway, we've got 7 months left in the year, that there could be some upside on smaller events in our operating income, which food and beverage hopefully is one of them.
Would that impact any of the tax revenue from the rooms at all too? Because that's obviously a gap too, and I don't know where the forecast is or where the city or the county are seeing those taxes coming in either, or what indicators we have.
Yeah, tax revenues, to me, Chairman Cantor, is it's a tough one.
Yeah.
That's one where I think is the most risk to this entire financial statement is the tax revenues, and it's because it's somewhat unpredictable. I'm optimistic that we can hit our budget numbers, but last year we did come in under our budget, and as I said, the difficulty is that when we're budgeting, we typically have about 6 months of actuals, because there's a 2-month lag from the date that we're receiving it to the date that it's reporting. So Marty and I weren't in a position, and we weren't ready to change our optimism on the tax revenues yet. I wanted to see how Q2 went, and then come September board meeting, if we need to report out on some sort of decline or bringing down tax revenues, we will. But I feel confident right now that it's still achievable based off.
Good. No, that's good to know on that lag, and it's good for us to understand that aspect too. We may need to budget or re-report based on what the information is. So we've got to be correct than a miss based on the information. So thank you, Kyle. Appreciate it.
All right, we'll go to page 9, which represents the district's annual capital budget forecast. Several projects are currently underway or scheduled to begin in the coming months, including the elevator projects on lines 8 and 9. As is typical, not all projects on this list are expected to be completed within the calendar year due to the timing and contingency items that arise. We will provide a more comprehensive update on capital at the September meeting. Pages 10 and 11 represent projected cash flow for the remainder of the year and reflect the district's cash position. Page 10 outlines the unrestricted cash projection. These balances are driven by the projected year-end income statement. In the bottom right-hand corner, the projected year-end balance is approximately $16 million, which is $3.2 million above budget. The variance, the positive variance, is primarily driven by savings from the 2016 appropriation debt refunding, reflected on line 10 under the month of October. Excluding those savings, unrestricted cash would be trending below budget, consistent with our operating and tax revenues discussed earlier. That said, the projected balance remains more than sufficient to support operational needs and absorb potential short-term cash variability. Page 11 reflects restricted cash activity. On line 20, we project growth of approximately 6.9 million, ending the year at 34.7 million, slightly below our budget. Management actively monitors this balance and meets regularly with Baird to evaluate debt management strategies. At this time, no refunding or defeasance is planned, but any change in strategy would be brought to the Finance Committee and Board for discussion. Overall, the district's liquidity remains stable. Mr. Chairman, that concludes my report. Happy to take any questions before we transition to the 2025 audit presentation from Baker Tilly.
Are there any questions, Kyle?
Yes, Mr. Chair, this is Bill.
Yeah, Bill.
Kyle, going back to the income statements, looking at line 34, interest income, we're showing we're down in the first quarter about 13% from where we would forecast to be. And then in our annual forecast, we're showing that improving to only about 1% down from budget. Is this an expectation of more cash on hand? Is this an expectation of more favorable interest rates, or are there other factors at play?
Thanks for the question, Bill. That is a direct result of $4.1 million that's in October. So that's the 2016 appropriation refunding. So that at the time that we were putting the budget together, we weren't certain that transaction hadn't been approved by the board. So we did not include it in our budgeted interest income. So the first quarter, yes, we are trailing, and we've seen a decrease in our interest income, mainly because our cash on hand hasn't been quite the same as last year. But what is closing the gap between year to date and annual is the last 3 months I have included, and it could be more than that. It really depends on when the cash is transferred or given to us from the state. So what I'm getting at is that $4.1 million has interest income that is forecasted for the last 3 months, which is helping close that gap. Does that make sense?
Sure. Yeah. So we'll see much larger cash balances that fourth quarter, and the earnings will be correspondingly higher. It makes sense. And is that restricted or is that unrestricted?
So the 4.1 million is unrestricted.
Unrestricted.
And yeah, I should have pointed out, I think I put a little tick mark on the bottom of the restricted revenues on page 10, a footnote just saying that it should correspond with the 4.391 million under October, saying reflects savings generated through the 2026 refunding designated for future capital investments. That is unrestricted. Will be unrestricted later this year. So we'll receive money from the state for the appropriation piece, and then we'll make a corresponding bond payment, and that savings between the decrease in the bond payment and the appropriation revenue will then be transferred to the district from the trust.
Okay. Got it. Thank you, Kyle.
And Bill, when we were working on the refunding, we didn't anticipate that we would get those funds until 27. So even if the board had approved, if we had known the board approval had taken place before we did the budget, we still wouldn't have put that cash receipt in this budget because we didn't expect to get it until 27.
Okay. Thank you.
Thanks, Bill. Are there any other questions for Kyle? All right. If not, I will turn it over. Kyle, if you want to
Yeah, for sure.
Wendy.
Absolutely. So before Wendy gets started, I'd like to briefly comment on this year's audit process. The engagement with Baker Tilly was highly collaborative and efficient. Information requests were handled promptly, and communication between management and the audit team was clear and consistent throughout. I'd also like to recognize the district's internal finance team, particularly David Ray. David brings a deep understanding of both our operations and the audit process, and his experience continues to be a significant asset during the engagement. We appreciate his efforts and the broader team's support in delivering a smooth audit. As for the audit of financial statements, management believes these statements are well vetted and are a result of the importance that Marty and I place on the integrity and transparency of the financial results of this organization. Following Wendy's presentation and any discussion, we will ask the committee to consider a motion recommending approval of the financial statements to the full board at next week's meeting. Wendy, turn it over to you.
Good morning, everyone. Yeah, my name is Wendy Younger. I'm a principal with Baker Tilly and responsible for the district's audit. The information that you have in your packet is both the presentation that I have up on the screen, but also the draft documents of both the financial statements and our reporting and insights document. As noted by Kyle, those are draft format until we receive approval at the full board meeting next week. Our agenda, very high level summary of financial information. We're going to go through the objective of the audit and the opinion that was issued. We will touch on the reporting and insights document, and then wrap up with a comment on the levy premium food service audit that we also do as part of the scope of our engagement. So on the next page, this is where I've highlighted the objective and the opinion that we intend to issue. The objective of the audit is to issue an opinion on the financial statements. We plan to issue a clean, unmodified opinion, which is the highest level of assurance that you can obtain from us as your audit firm. An unmodified clean opinion means that the financial information is believed to be materially accurate, that all disclosures that are required to be included have been included, and that generally accepted accounting principles have been adhered to. One item I will also note is that there were no new governmental accounting standards or GASBs effective for WCD for 2025 or any that had any impact. So nothing was added to the opinion in the form of an emphasis of matter. So a very similar type opinion that you've received in the past. Again, a very favorable opinion. To switch gears and go through some very high level financial information. So when we look at the information that's provided on the next slide, this is your 25 operations compared to your 24. And a lot of things have happened in one year and not in the other. So when we look at the total assets, you'll notice there is a decrease in those total assets by roughly $27 million. A couple things to keep in mind. Cash for 25 was essentially a break-even year. So when we look at the cash activity, there was some decrease in unrestricted and increase in restricted by roughly the same amount. Unrestricted decreased because you paid down the final remaining bills on the expansion and utilized roughly $5 million of funds that you had on hand in your unrestricted money from Levy to pay for those costs. Your restricted cash increased. Tax revenues and investment income were higher than the principal and interest payments that you needed to make during 25. So overall, again, a break even in cash, and we'll see that in a moment on the cash flow page. Other items within that total assets category, capital assets is the other area with very large fluctuation. Overall for 25, $6.2 million of additions in various areas, one being the public address system that was added during the year, some building improvements, and then again, the final improvements on the Baird building. But the other large fluctuation, $29.8 million of depreciation. So that is the largest fluctuation within that total asset category, and we'll see that on the income statement in a moment. When we look at the deferred outflows of resources, these are items that relate to the pension and OPEB activity. This fluctuation, this decrease of $5 million in outflows is really based on the City of Milwaukee employee retirement system activity, and this is all based on actuarial data and information that is provided through the pensions audit. There is an extensive footnote that also highlights this activity. Within the current liability section, you will see that roughly $1 million decrease, really two pieces to that. Accounts payable down $3 million over the previous year. Again, a recurring theme, expansion was going on. You had some remaining residual payments that were due, so that accounts payable activity was higher than what you would expect in a normal operating year. And then your unearned income. So this is money that's been collected in advance for future events and conferences. That was up $1.4 million. So the net effect is roughly $1 million decrease. When we look at the long-term liability section, if you think of this as where you record all the long-term obligations, so this is where your debt is recorded, your accrued interest on that debt. A couple of things to highlight there. The pension liability with the city saw a $6 million decrease. So when I talked about those outflows being decreased, the pension liability also decreased during the year. Accrued interest on long-term debt did increase by roughly 17 million, but then ultimately the pay down, the normal payments that you make on your bonds saw a decrease of 19 million. So overall, that fluctuation resulted in that roughly $9 million decrease in liabilities. When we look at the deferred inflows, similar story that relates to employee retirement system, and that did see a small uptick of 1.2 million. And again, that great information within the footnotes highlighting the activity in there. So when we look at the bottom line, you'll note total net position for 24 ended at 112 million, 89, almost 90 million for 25. So a decrease of 22.9 million. When we go to the next page, this is where we highlight the revenue and expense activity for the district. When we look at the total operating revenues, roughly a $3 million increase over the previous year. Couple things to keep in mind. In 24, you had the licensing fee that came in for the RNC. So you had some roughly $4 million of revenue in 24 that you didn't have in 25, but overall ultimately made up for that in your food and beverage sales and ultimately increases in parking revenue during 25. When we look at the operating expense section, you'll see a $6 million increase within that category. Again, keeping in mind the Baird Center was open all of 2025, so an uptick in costs there. Wages were up 1.2 million in the allocated operating expenses. You'll note in that unallocated operating expenses, relatively break even year over year. And then ultimately the depreciation expense number that I referred to previously, 29 million compared to 26 million in the previous year. Good news on that, not a cash number, and doesn't affect the inflows or outflows of your cash activity. When we look at the non-operating revenue section, again, relatively consistent, down roughly $1 million over the previous year. You can see there's a small decrease in the the interest expense that was paid on your debt, but you'll also note that other income row, which is where investment income is included, saw a decrease there also, which was the reason for that fluctuation. So overall, at the very bottom, you'll see that 22.9 million that I mentioned was a decrease in net position. And again, the district ended at 89.6 million of net position as of the end of the year. On the next slide, this is a synopsis of the cash flow activity. I'm not going to go through this in great detail. You can see that top section is your operating activity, looking to generate enough revenue to pay your employees and your vendors. Ultimately, have a decrease in cash of 20 million, but then ultimately you receive the funding that comes through on that next section to help cover that cost. A couple things just to highlight when you look at that capital and related financing activity section, you can see again, items are relatively consistent year over year. The only item I will note is that in that principal payment on bonds payable, you do see almost a 12 million or a $10 million decrease. That was in 2024, there was a payment of 12 million made on the 2020 debt. So kind of a additional payment that was made there, utilizing the cash on hand. Interest expense, again, down slightly over the previous year. And then capital assets, as you would expect, 24 was significant activity on the expansion project. And then that continue to decrease into 25. So as you can see, the very bottom row, you used 115 million of cash in the previous year, and ultimately a break even, as I noted when I began, $229,000 decrease in 24. Or I'm sorry, 25. Switching gears then, moving over to the reporting and insights document, which is a separate document that we issue as part of the audit process. This document accomplishes a couple different purposes for us as your auditors. We communicate any material weaknesses or significant deficiencies in internal controls. Via that document, we also share any comments or recommendations. All of our required communication is included in that document. The only items that I would just quickly highlight is the material weakness. This is the same material weakness that has been included within the district's document for numerous years. This relates to the fact that we, as your auditors, prepare the audited statement. So we become part of your internal control structure for a very brief period of time. And we do ultimately make the journal entry, material journal entry related to the pension activity. So because of those two items, there is a material weakness included. Again, not something that's new or different or uncommon. Other items that I would note, other comments and recommendations, there's some new governmental accounting standards or GASBs that are effective for the district in the upcoming years, 103 through 105. 103 will have some impact potentially on the activity and the content of the audited statement. So we'll make sure we work with Kyle and his team to ensure the district is in compliance with those standards as they become applicable. And then the required communication section, which is numerous pages in the middle of the document. This is what we need to communicate with you as our auditors or as your auditors. And really the main things that I would highlight in there, there's a section that highlights the estimates, numerous estimates that are included within the district's financial statements, from the pension activity that we've talked about, OPEB, depreciation, all of those, and they're relatively large numbers. So I always just like to remind those charged with governance that these are important things to be mindful of as you're looking through your financial data. Also, the material journal entry is noted in that section.
Wendy, what you mentioned the changes, and you could have some significant, just can you give a brief overview of what that might be?
So the GASB 103 is really looking at some of the formatting of the statement. So some of the categories that will come through on your income statement will be in different sections, some of the non-operating. So it's really more of a classification type thing. The management discussion and analysis, which Kyle does a great job writing, that is entirely revamped. So it's going to, we're actually seeing a lot of our clients go to the point of not even including one because the time and effort may not be worth it. But again, we'll work through that with Kyle to make sure. So really more of what is in the financials and how it's presented, not changing how it's accounted necessarily.
Thank you.
Last thing I just want to highlight before I switch to quickly to Levy is, as noted in your financial statements, the very last footnote is a subsequent event footnote where we have included the refunding of the 2016 bonds, the 57.8 million. So I just wanted to note that because that's not something you have typically seen in the past. Lastly, then, as part of the scope of our audit, we do an audit according with the catering contract that exists between the district and Levy. We've done the work. You have a draft in your packet, nothing unusual or unexpected there. That audit, really, we look at the revenues and expenses that come through and ensuring and assisting the district in being comfortable that the funds that are flowing over to the district from Levy are appropriate. So on the very last slide, my contact information. I'm happy to talk with any of you, go through any of this in more detail, answer any questions you may have. So please feel free to reach out. But I would also be happy to answer any questions you might have now.
Are there any questions either in the room or on the line for Wendy? Great. Okay, thank you, Wendy. Appreciate it. I think we're endorsement.
Correct. I would ask the committee for an endorsement for approval of the financial statements to be adopted by the board at next week's meeting.
I'll
The audit, thank you.
move an endorsement.
Yes. All in favor, say aye.
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 All right, with that, we will move it, I think, over to Marty for our CEO report.
Thank you. Knowing that we've got another meeting at 9:30, I'll be brief as far as what I'll be going into more detail next week in my full report. It's been a while since I've been able to give an update on the event activity that we've had the past several months, as well as what large events we have coming up next several months, taking us through a pretty impressive calendar. Marcom has been working on revamping a number of documents that are supposed to be delivered next week. So we'll be able to share them with you at the meeting It's been a number of years since we've revised and updated our venue guide, which is used both internally and for meeting planners when they're looking at our facility to do events. So that's been totally revamped and updated. And then the annual report, which we've been working on for the past 5 months or so, to get a document that we can share internally as well as externally on our performance over the past year. Those will be out next week, and I'll share them with you. A couple of things that you may already be aware of. I'm going to talk a little bit about the top workplace recognitions that we received from the Milwaukee Business Journal locally, and then national acknowledgement through USA Today as one of the few to get a national award for top workplace. We announced last month that our 2026 gala giveaway winning organization was the Little Warrior Foundation. I'll share a little bit more about that next week. Very impressive organization that has raised millions of dollars for Ewing sarcoma cancer research. They have 1 full-time employee, which is amazing, the work that they've done in the past 4 years and the money that they've raised. So really, really proud of selecting them. 157 people, organizations participated. They had participated every year that we've done this, and their application this year was just inspiring. So I'll share a little bit about that next week. We just completed a back of house art project that we've incorporated as added value into the We Energy Foundation art project with art exhibit at the Baird Center. You hear us talk about BPX and looking to really create a good work environment, respecting our employees. The back of house area traditionally in venues like ours, very sterile, yet we have hundreds of employees walking through the space every year, every day, quite frankly. Anyway, we reached out to 4 local artists, asked them to put together some examples of how we could make this space more compelling, demonstrate our support of employees, and that work has been completed. It really is spectacular, so I'm going to show you some of the pictures and the locations. And our employees had a role in one of them, which you'll see more about next week. Really, really impressive work by the local artists, something we're very proud of. Last Friday, through Kane Communications as the executor, we closed the employee engagement survey. The last one we did was 2023. Those results are being tabulated now. We should have those results in the next 45, 60 days, and I'll share the results and the employees' perspective of our organization at the September board meeting. HR continues to be very engaged with developing training and professional development for our employees. A number of programs that I'll get into next week. Just it's really rewarding to see the extent that this training and professional development is being taken advantage of by the staff, and how impactful it is to them for their careers today and in the years future. And then lastly, there's not usually much show and tell in my report, but next week I'm going to humor you with a 90-second compressed video of a 4.5-minute performance by one of our employees at our town hall last week. Town halls came about because of the employee engagement surveys, making sure that we were communicating with regularity to the staff. We have gotten very engaged over the past 8 years in working with local nonprofits, helping raise funds for them. One of the organizations we've gotten involved in since 2024 is UPAF. So we are involved in their annual campaign. This is the 2nd year we've worked with them. To try to do something out of the box, HR did an employee showcase, which is a talent show, using the stage of Miller High Life Theater. We had 9 employees want to show their talents. It was an amazing show. The audience was able to vote on the winner of that performance. Woman who won, part-time housekeeping person who did a fabulous rendition of song from Dreamgirls. I can't remember the name of it, but Jennifer Hudson did that song in the movie, and she did an impressive rendition. Anyway, one of our full-time employees took the song Be Our Guest and wrote a parody to it, to the theme BPX, and he brought the house down, and we asked him if he would recreate that performance at the town hall meeting. It was show-stopping, unbelievable. I didn't think 4.5 minutes was, I thought that was too much to share with you, but we condensed it to a 1.5 minute piece. And I ask when you watch it next week, not only to just appreciate how this employee put himself right out there and no regard about how he was performing, which was phenomenal, but his creative talent, and then more importantly, the response from the staff during his performance. If I had to like ask for, give me an example of engagement in BPX, we captured that in that one town hall. So I'll share that with you and hope it'll be uplifting and you'll take pride in everything we're involved in doing there. So that's the short version of what I'll be a little bit more worried about next week, Mr. Chair.
Great. Any questions for Marty? Right. If not, I'll turn it over to Liz to give us just an overview. I mean, I know personally watching the committee work together, and I know some of the folks on this finance committee were also involved in the best use committee, and I appreciate the time, the effort, and the thought that went around this to make sure that we are all getting aligned on what really will be a good project moving forward and good thinking and conversations for the city. So Liz, I'll turn it over to you. Thank you for your efforts too in leading that. You've done a phenomenal job.
Oh, thank you. I just have. Open email. I saw that. Thank you so much. I really appreciate it. Okay, so if you just want to flip through the presentation, just to start with, this is some background on what the circumstances were leading up to the London study. So, a certain, some things had arisen here. There were 2 leases, one for the Admirals and one for UWM that were expiring within the next few years. 2 Wisconsin Center District assets, the arena and the theater, were requiring significant investment in the coming years. And it was a broader effort to explore how the Wisconsin Center District's assets could be most effectively utilized in the future. On January 30th, our chair, Jim Cantor, announced the formation of this special committee that I was asked to chair. Thank you to Alderman Bauman, Mr. Crosby, Mayor McBride, and Gerard Randall for participating. Your insights and attention during the meetings and their discussions were invaluable. On the next page, you can see the committee presentation timeline. We did get what I feel like was pretty good background on the study itself, and then information from people that I think were, I would identify as more supportive of the outcome of the presentation, and then some that sort of took issue with some of the items in it. And so, I think it helped us to kind of put together a better understanding of the study and what the needs are for the Wisconsin Center District. And then at our first meeting, you can see our charter that we established on the next page. I thought it was important to have some guidelines for what we were doing when we started, because it felt a little open in the beginning. And so just to provide some guidelines. So ultimately, do we need to pursue a convention center hotel? Where should it be located? Is the Wisconsin Center District the catalyst for this hotel? Based, where it should be sited, financed, and built? And then is there a different or better catalyst? Ultimately, you can see what our recommendations are on the next 2 pages. And I just have a little statement that I'd like to read that the committee put together. Basically, so our highest and best use subcommittee was asked to determine whether Milwaukee needs a convention center hotel. After reviewing the consultant's report, we held a series of meetings to hear presentations from tourism, financing, and hotel industry experts who expressed a variety of opinions. Following those meetings, we unanimously decided that Milwaukee does need a convention center hotel. We did not decide where the hotel should be located or whether the Wisconsin Center District would be the right catalyst. Our recommendation is to explore hotel room expansion as a long-term strategic objective while avoiding premature decisions on site financing or ownership. We recommend that an exploratory committee be assembled from such organizations as the Wisconsin Center District, the City of Milwaukee, Visit Milwaukee, the Greater Milwaukee Committee, and the Milwaukee Metropolitan Association of Commerce, among others, to further look into how such a hotel might be funded and where it should be located. I would say that before taking any questions, I would like to thank Board Chair Jim Cantor for the opportunity to chair the review committee. I would again like to thank all the committee members that gave their time and valuable insight into the review of the study and the presentations and discussions that we had over several meetings. The fact that we all came to the same conclusion at the end at times during the process didn't seem like a possibility. As a committee, we would like to stress how important it is that an exploratory committee be formed and that the consultant's report and our summary recommendation not sit on a dusty shelf without action.
Great.
So thank you. And I'm happy to take any questions. I'm sure Alderman Bauman is as well. But that's my abbreviated report. I too will have more to say and an additional item to offer at the full board meeting next week.
Are there any questions for Liz on the phone or in the room? Or for Bob? Great. Well, again, I echo the sentiment I said on the onset here. I think it was a tall task considering walking in. I think Liz, you did a great job, and the fact that we did come to some conclusion together was awesome. That doesn't just happen. It comes with great leadership and great people on the committee working together to get that done. So very appreciated. I know we'll have a broader discussion on this in the full board meeting, but we felt it was important to get this in front of both committees before we go in there, just again, in the spirit of full transparency that we want to continue to have here. All right, if there are no further questions, we will go on to the next few things, the board meeting agenda review, which is in your package for next week. Again, remember next Friday, May 15th, full board meeting. We will go over some similar things here with an expansion, as Marty said, on some of his comments in the CO report, and as Liz stated, expansion on a little bit and probably some more questions around the board. And then we'll go through the audit as well, again, I believe with Wendy. Future meeting dates, those are in your packets as well. I think everyone should have those on their calendars from now through next year already. Robin, is that correct? Did you send out the one for next year yet? Not yet. Okay, that's okay.
Soon.
Yes, but please make sure. Yes, soon. But those are in advance. If you want to put them on your calendar in advance, they are in here. And as always, if you have any future committee discussion items that you'd like brought up, please address them now, or again, you can contact me offline if you'd like to put other things on the agenda as we continue forward. All right. If there is nothing else to discuss, I will seek a motion to adjourn.
I'll move adjournment.
Have a second? Second. All right. Thanks. All in favor, say aye.
Right here, drinking.
Here, right.
Aye.
All in favor, say aye. Those on the phone, please.
Aye.
Oh, any opposed? All right. Thank you. The meeting is adjourned. I appreciate everyone's time and efforts getting to a great spot with this stuff. Thank you. We'll see you next Friday.
anything fun coming up?
can hear us, hopefully. We'll first start with Robin with the roll call.
Mr. Grady Crosby, not mute. Mr.
Can you hear us, Grady? Right, he's on.
Okay. Mr. Mark Flaherty.
Here.
Representative Kaylin Haywood. Mr. Jim Cantor. Mr. Greg Marcus. We have a quorum.
Great. First order of business is any discussion and approval of the meeting minutes from our last committee meeting on Thursday, January 22nd of 2026. Do we have any discussion? Seek a motion for approval. Whatever. Do we have a second? Grady? You're on mute, I think.
Can you hear me now?
Yes, sir. Yep, all right. All in favor, say aye. Aye. Any opposed? All right, we have on the agenda, I'm gonna move Liz's the highest and best use recommendation to the next point due to some time constraints that she has, and she's been kind enough to come here and just give us an overview of where we are netting out before the board meeting. So I want to make sure both committees saw the preview. I said it last time, but I also want to publicly thank Liz and the rest of the folks. I know Grady, you were on the committee as well, for their time, effort, thought, and analysis on this, and the input from a lot of people, and specifically Liz's leadership to get us to a good conclusion and get a lot of opinions that are out there into one succinct viewpoint as we are moving forward with things on the best use study. So with that, I'll turn it over to you, Liz.
Thank you. So you should all have a printed out presentation, or for those online, I believe you should have received it in your email. Just a quick background on why the on the study itself. It was initiated amidst the following context. There were two leases, one for the Admirals and one for UWM, that were expiring within the next few years. Two Wisconsin Center District assets, the arena and the theater, are going to require significant investment in the coming years. And also a broader effort to explore how the Wisconsin Center District's assets could be most effectively utilized in the future. The committee was formed, or was announced on January 30th. It was formed by our board chair, Mr. Cantor. I was asked to chair, Alderman Bauman, Mr. Crosby, Mayor McBride, and Mr. Randall all served on the committee with me. And over the course of several months, we heard from various stakeholders in the project. We heard from the Hundred Partners, who were the study, completed the study, and then sort of what I consider to be people that were more, I guess, in support of the outcome, and then those who took issue with some of the things in the report, and then also a group that kind of talked to us about financing. And I feel like it was a good background to sort of help us understand what was in the study and sort of what would be needed to move forward. At our first meeting, we agreed on this charter. It was important to have, I think, some guiding principles, some questions to ask ourselves as we heard from stakeholders and contemplated the study, just to keep us moving in a direction to come up with sort of a concise recommendation. So what we were asked is, does Milwaukee need to pursue a convention center hotel? Where should it be located? Is the Wisconsin Center District the catalyst for getting a convention center hotel sited, financed, and built? And is there a different or a better catalyst? And on the next two pages, you can sort of see a summary of our recommendations. I would like to read a statement that our committee put together, summarizing our findings. So our highest and best use subcommittee was asked to determine whether Milwaukee needs a convention center hotel. After reviewing the consultant's report, we held a series of meetings to hear presentations from tourism, financing, and hotel industry experts who expressed a variety of opinions. Following those meetings, we unanimously decided that Milwaukee does need a convention center hotel. We did not decide where the hotel should be located or whether the Wisconsin Center District would be the right catalyst. Our recommendation is to explore hotel room expansion as a long-term strategic objective while avoiding premature decisions on site, financing, or ownership. We recommend that an exploratory committee be assembled from such organizations as the Wisconsin Center District Board, the City of Milwaukee, Visit Milwaukee, the Greater Milwaukee Committee, and the Milwaukee Metropolitan Association of Commerce, and also staff from the Wisconsin Center District, among others, to further look into how such a hotel might be funded and where it should be located. Before taking any questions, I would like to thank Board Chair Jim Cantor for the opportunity to chair the review committee, and I would like to thank all of the committee members that gave their time and valuable insight into the review of the study and the presentations and discussions that we had over several meetings. The fact that we all came to the same conclusion at the end at times during the process didn't seem like a possibility. As a committee, we would like to stress how important it is that an exploratory committee be formed and that the consultant's report and our summary recommendation not sit on a dusty shelf without action. And with that, I'm happy to take any questions.
Are there any questions for Liz? I know mainly Mark, obviously Grady, you've been on the committee, so I don't know, or anybody else that's online. Good job.
Hey, thanks.
No, again, Liz, really appreciate the time, effort, leadership. I know these are not easy tasks, and we appreciate the guidance you've given the entire board to get this done. We'll have a more robust, probably explanation or discussion at the board meeting next Friday.
Yes.
Appreciate it. Thank you.
Yeah, thank you. Have a great day, everybody.
Before we jump in, Kyle, one more thing. I did neglect to get the approval of the meeting minutes from our special committee meeting back on, what was that, March 13th, Friday, March 13th. If I can have a motion for approval. Motion. We have a second. Brady?
I'll second it.
Right. All in favor, say aye.
Aye.
Any opposed? Special meeting minutes are approved. Thank you for pointing that out, that I missed that. All right, Kyle, I think we'll finally get over to you now.
Okay, thank you, Mr. Chairman, and good morning, everyone. Today we'll be reviewing the year-to-date 2026 financials, along with an updated forecast for year-end. Before we get into the numbers, I'll provide a brief update from the Finance Committee meeting that just concluded. Baker Tilly presented the draft 2025 audited financial statements to the Finance Committee this morning, and Baker Tilly plans to issue an unmodified opinion indicating that the district's financial statements present fairly in all material respects the financial position of the Wisconsin Center District, which is the result management and the board want to achieve at the conclusion of the process. So the Finance Committee voted to recommend that the full board adopt the audited financial statements at next week's board meeting. Baker Tilly will also be in attendance at that meeting to present to the full board prior to a vote. Overall, the results of the financial statements are consistent with what was previously shared to this committee in January. So with that said, let's move into the 2026 numbers, and we'll start with page 6 of your packet, which is the event mix summary. As shown in column B, the current 2026 forecast is approximately 106% of budget and about 95% of 2025 actual activity. So good news here is that we are exceeding budget in both conferences and conventions, as well as corporate meetings, when comparing columns A and B, budget to forecast. Activity remains on budget in both the arena and theater, as seen on lines 14 and 21. And as a reminder, while this report is helpful in understanding event activity levels, it is not a perfect indicator in understanding building utilization or net income. Moving to page 7, which is our year-to-date income statement. Column IDs A, B, C, and D at the top. Column A reflects the budget through March. Column B reflects actuals, and column C shows the variance. So starting with the bottom line, on line 64, we are unfavorable to budget by $715,000. There are several primary drivers contributing to this variance, which I'll walk through now. Starting with operating income lines 1 through 14, particularly line 4, food and beverage revenue is down from budget about $193,000. While gross F&B revenues are exceeding expectations, operating costs, particularly labor in the month of January and February, have come in higher than anticipated. And this, excuse me, this trend is consistent with what we experienced in early 2025. So management continues to work closely with Levy to monitor and control both food and labor costs while maintaining the service standards we set for the organization. This will be an area of focus as we develop the 2027 budget. Despite this, total operating revenues are down less than 1% to budget as shown in line 14. The operating expense side, lines 15 through 27, focusing on line 20, total event expense is the primary driver of this variance. The total event expense relates to payments to arena tenants, with approximately 1.2 million driven by contractual obligations for food and beverage share, merchandise, and catering credits associated with the Admirals. It is important to note that food and beverage revenue share in this category is based on gross sales. As a result, even though the profit share from Levy on line 4 may be trailing budget, there is no corresponding reduction to these payments. This contributes to the negative variance of approximately $354,000 as seen on line 27. Moving to tax revenues on line 33, we're about 1.2% below budget, driven entirely by city and county room tax. And at this point, management is not overly concerned with this variance. One of the challenges with budgeting and forecasting tax revenues is the inherent lag in the data, as developing the budget relies on partial year actuals. So as we look ahead to the 2027 budget process, management will be evaluating, as we do every year, our growth assumptions in this area to ensure they are aligned with current trends. Moving to non-operating expenses, lines 40 through 63. Line 44, health and dental insurance is running higher than expected due to timing of our FSA employer match contribution. This is a timing difference and is expected to normalize over the course of the year. Lines 49 and 50, legal and professional services combined are 177,000 over budget. The increase is driven by elevated activity levels with Hush Blackwell and Kane Communications in the first quarter. And based on these current activity levels, we do not anticipate a significant increase in this variance beyond what we have experienced to date. So historically, through first quarter, it's not uncommon to see variances of this nature. The combination of these factors results in a negative net income variance of approximately 28% to budget, as seen on line 64. Turning to the annual forecast on page 8, focusing on columns E through H at the top. Column E reflects the full year budget. Column F reflects the current year end forecast. So starting again at the bottom with line 64, column G, the projected variance is approximately 817,000, unfavorable to budget. While the dollar variance is larger than what we saw year to date, it represents a much smaller percentage, approximately 3% for the full year compared to 28% year to date. Jumping up to total operating income on line 14, that is projected to be slightly below budget by about 38,000. We expect food and beverage performance to improve as the year progresses, closing the current gap. Most other event-related revenue categories are trending ahead of budget, with additional upside potential based on our current event mix. On the operating expense side, we are projected to come in slightly favorable to budget. This is primarily driven by utility costs on line 18, along with total event expense on line 20. The total event expense is related to timing, where budget included activity in May that will not occur as the Admirals and Wave seasons have now concluded. Moving to non-operating revenues, lines 28 through 39. Tax revenues on lines 33 reflect the current year-to-date shortfall, with the remainder of the year forecasted at budget. And on line 37, the Bucks District ticket surcharge is below budget due to the absence of playoff games, as the budget had assumed one round of Bucks playoffs. As for non-operating expense, line 48, Visit Milwaukee is higher than budget, driven by the 2025 performance payment exceeding prior estimates used during the budget process. Line 52, insurance expense is $150,000 over budget. This reflects higher than anticipated premium increases in a continuing hard insurance market, despite the proactive work with Horton, the district's insurance broker, during our budget process. So during the budget process time, management was actively working with Horton on renewals and evaluating potential carrier changes on certain policies. As a result, the district did transition certain coverages from Travelers to Selective. Overall, the district is projecting an $817,000 shortfall on $28 million net income budget. And at this time, management is not overly concerned with the full year outlook and continues to actively manage performance relative to budget. The current forecast exceeds 2025 actuals, and operating revenues have been projected with a degree of conservatism. The primary areas of risk do remain in tax revenues, which can be sensitive to broader economic conditions and spending related to any legal and professional services. The balance of the calendar remains strong with opportunities for upside. As a result, we may see improvement in the net operating income as the year progresses. Any questions on the income statements?
Kyle, the only thing I'd like to add, just going back to the insurance component, I think you were very polite saying that we were looking for other carriers, which we did in fact do. Part of it was out of necessity. Travelers, who'd been our provider for over 20 years, told us that corporately they were not going to issue any policy to us and similar type of organizations as they became up for renewal because the risk was too high. Even though our claims are very low relative, they were not providing public assembly buildings any insurance. So that contributes to why the price went up. We had a favorable rate from Travelers, and they went away.
Yeah, the process was a little more difficult than what I made it sound.
Yeah.
That is for sure.
Just, I mean, these gentlemen all know ladies involved in insurance business, so I just okay.
Thank you. Anything else on the income statement? Otherwise, I will move to the capital budget. Page 10 represents the district's annual capital budget forecast. Several projects are currently underway or scheduled to begin in the coming months, including the elevator projects on lines 8 and 9. As typical, not all projects on this list are expected to be completed within the calendar year due to timing and contingency items that arise. We will provide a more comprehensive update on capital at the September meeting. Pages 11 and 12 represent projected cash flow for the remainder of the year and reflect the district's cash position. Page 11 outlines the unrestricted revenue projections. These balances are driven by the projected year-end income statement. So in the bottom right-hand corner, the projected year-end balance is approximately 16 million, which is 3.2 million above budget. So the variance is primarily driven by savings from the 2016 appropriation debt refunding reflected on line 10 under the month of October. Excluding those savings, unrestricted cash would be trending below budget, consistent with our operating and tax revenue variance discussed earlier. That said, the projected balance remains more than sufficient to support operational needs and absorb potential short-term cash variability. Page 12 is the restricted cash activity on line 20. We project growth of approximately 6.9 million, ending the year at 34.7 million, slightly below our budget. Management does actively monitor the balance and meets regularly with Baird to evaluate any debt management strategies. And at this time, no refunding or defeasance is planned, but any change in strategy would be brought to the Finance Committee and Board for discussion. Overall, the district's liquidity remains stable. Mr. Chairman, that concludes my report. I'm happy to take any questions.
Thank you, Kyle. Do we have any questions for Kyle, either in the room or on Brady? Mark? Okay, great. Thank you, Kyle. Well done. Marty, we'll turn it over to you for the CEO report.
Thank you. I'm going to be brief, giving you an overview of different topics. I'll be going into more detail in the full board meeting next Friday. I'm going to share with you some real good successes of not only events that we have had in the past several months, large events. In fact, one of the events we had a couple of weeks ago was the largest trade show we have ever had in our facility. So that's something we're real proud of. And then give you an update on what's going on in the building through August. We also have some really spectacular events coming up. Marketing and Communications Department has been very active in fine tuning and developing a number of documents that we use with tremendous regularity. One is the venue guide. We updated it initially when Baird Center was coming online, but there are a lot of information about Baird Center that has, you look at the as-built, so a lot of the information is needed to be tweaked from what we thought it was going to be to what it actually is, along with updated information on both Panther Arena and Miller High Life Theater. That's been completed. And then we have developed, and we'll have next week, both documents to share with you, but it's an annual report that just shares with internally and then our business partners what the district has been up to in 2025 and basically give a report card and something for us to reference in years to come. A couple of acknowledgements that we received. I'll get into a little bit more detail. We received another acknowledgement from Milwaukee Business Journal being identified as number 8 in the category of mid-size workforces for employer of choice top workplace. And then for the first time ever, we were acknowledged by USA Today for a national award for the same type of acknowledgement. Gala giveaway winner was announced last month. We had 157 applicants. We ultimately selected the Ewing Sarcoma organization. They've just done a tremendous job in the past 4 years of their existence in raising money for this cause, and all that money is directed to research. As much as they've raised over the past 4 years, they've done it all with a tremendous volunteer network, but also with only one full-time employee. So I'll share a little bit about that. They were quite surprised when we told them that they were our winner. One of the things you all are familiar with is the art investment that we made as part of the expansion, and we're able to sell naming rights to it to the We Energy Foundation. We wanted to take that same idea of doing something special with art, but focus on the back of house areas where most of our employees spend a tremendous amount of time. So we reached out to 4 local artists and got ideas from them, asked them to come to us with different examples of what they saw on what otherwise is institutional white space to convey our BPX mindset and capture different aspects of Milwaukee. That art has been completed. So I'm going to share next week with you the actual photos of how they look. It really takes what was a very institutional drab area and makes it very special to all of us who go past that. And the fact that it's 4 local artists just even adds to how special it is. Last Friday, the employee engagement survey that we last did in 2023 was completed. We had participation rate a little bit better than last year, but still not to the levels we were the first couple of years we did it. So that's something we're going to focus on in future years. Those results are being tabulated, and I'll share that with the full board at the September board meeting. One of the areas that we, in our evolution, we're probably late in focusing on, but are heavily invested in it now. It's employee training and professional development. That program, BPXU, was launched end of 4th quarter of last year. Had some really great programs, really tremendous success stories, which I'll share with you in greater detail next week. And then lastly, as I've shared in prior meetings, we as an organization have got very involved in the community, not only in volunteering and participating on boards, but also participating in different not-for-profit fundraising campaigns. One of the organizations that we've been involved with, this is our 2nd year, is UPATH. To try and do something a little different, HR department thought it would be an interesting idea because of the assets we own and operate, specifically Miller High Life Theater, that we put. We had 9 full and part-time employees participate. They were amazing. One of the participants is a full-time employee. He does a lot of our graphics for the exterior and all the interior video boards. He took the song "Be Our Guest" from Beauty and the Beast and made a parody to the tune of BPX, or the name of BPX, and His 4.5 minute performance brought the Miller High Life Theater audience down. We asked him to do it at our town hall meeting last week, and he was very engaging. He went off the stage, intermingled with the attendees. Just an amazing experience to be a part of and witness. So I took the 4.5 minute performance and thought that might be a bit much for a board meeting. We edited it down to a 90-second package so you can see it next week. But not only is his performance and the energy he conveys so terrific, but I asked you to look at the members of our staff who were in the audience, how they were engaged with Thomas and how supportive the group was. Probably the best, most engaging town hall meeting we've had since 2019 when we introduced PPX. So great, some uplifting stuff to share with you next week, and I look forward to your reaction. Mr. Chairman, that completes my report.
Awesome. Any questions from Artie? Ready, Mark? We're good? All right. Thank you. We look forward to the expanded discussions on those, especially the last point. And I do know the folks from the Little Warrior Foundation. I know Maggie Spada well, and they've done really great, amazing work. So I think that's a great work. With that said, we'll move on to our next agenda item, which is closed session. The committee may convene in closed session pursuant to Wisconsin Statute 19.851C to consider the employment, compensation, and performance evaluation data of certain WCD employees over which the committee has jurisdiction or exercises responsibility. Do I have a motion to go to closed session?
Second.
We have a second. Second. All in favor, say aye.
Aye.
All right, we'll take a moment. Any opposed? Right. We only have 3. I'm sorry, I was just doing math. So no opposed. We will take a minute to clear the room and mute and do what we need to do and then have that discussion. Thank you. we are now in open session. We have a full, you have the agenda for next week, Friday, that's been in front of you. Future committee dates are also in front of you, so make sure we check off everything on our agenda. Any other discussion items, please bring to me. We'll make sure we get them on the agenda, and you know the appropriate timeframes that we have to publish our agendas. So I would ask that you at least get those discussion items to us in a week in advance. With that, I have a motion. I will seek a motion to adjourn.
Second, first motion.
Brady.
Second. I'll
All
move
right,
it.
all in favor, say aye.
Aye.
All right, we are officially adjourned. Thank you, everybody, for your time and effort on this, and we'll see you next week.